Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Streamline Capital. Happy to introduce you guys today to JP Albano. JP, welcome to the show.
Thank you so much. Looking forward to chatting today.
Awesome. So do us a favor and tell us a little bit about yourself and, kind of how you got into the real estate business.
Yeah, man, it seemed like a series of transitions in my life and changing one hat to another one. I started out as an engineer, was a big computer guy a long time ago in a galaxy far, far away. Then kind of got into doing some pre-sales or post-sales engineering stuff, stumbled my way into technology sales. Turns out pretty good at technology sales. Who would have thought? A lot of I guess, personal or limiting beliefs around sales, but worked with that. And then found myself making a lot of money, which was a totally wonderful problem, quote unquote, to have.
Great problem to have.
And it creates a bunch of unique situations for you. One of them for me was, you make some really good money and then you see more and more of it disappear from your check. You don't even get to spend it, right? And then for me, years and years of seeing that, I'm like, man, there's got to be a better way to escape these high taxes. Through research and kind of, figuring things out, I realized, or learned, I should say, that the problem fundamentally is the fact that if you're a high income earner, it's how IRS categorizes your income and how you're taxed. So high income earners, ordinary income or active income. And, depending on where you're at, you can be paying 37%, plus state and local and all the other taxes. So almost half your check. But if you can make money through capital gains, through passive income, oh my God, that opens up a whole new world. So I'm like, well, how do you get capital gains? And that's, I found stock market trading, like maybe being a day trader. So tried my hand with that, learned that number one, I wasn't good at it. I did learn how to read a candlestick chart, which is cool. But then I realized, like, man, it's super stressful to be a day trader. If you're not like watching your screen at every second, it sucked. So, but through that whole process, Brian, I realized what I wanted was passive income. I wanted this thing where I didn't have to sell hard drives for the rest of my life. So I realized real estate was a wonderful vehicle into that. But then you kind of step into a new world of like, well, what in real estate? Where in real estate? There's so much real estate things that you can do. And so I kind of quickly sorted and realized that apartment investing really, really tickled my fancy. It made a lot of sense to me. And I decided that I was going to get, learned on that. I hired a coach and enrolled in a program. And I was going to be an LP investor. So I can keep doing my small thing, make some good money, throw that into real estate and, become financially free and all the things. So that was the plan. And that's sort of my background there.
Nice. So LP first for the passive income. I think that's a great idea for people starting, but you're making a lot of money here. You wanted to get that passive income started. Love that trajectory. How to go from there?
Well, it turns out I was in a point where I was kind of getting, we'll call it disenfranchised with sales. Been there for a number of years. Sales is hard. My particular role, it was even harder because I had two clients. I had, the end user client and I had manufacturer sales rep client working as a reseller. So it was pretty stressful. And when I started learning and getting involved in real estate things, because I wanted to learn how underwriting worked, I wanted to be, the way I learn, I need to do everything sort of thing. So I kind of realized, you know what, maybe being an active investor, that might be more rewarding for me, right? Because it really kind of tickles my my fancy there. So I actually kind of shifted gears. I'm like, you know what? Forget this LP stuff. I actually want to be an active investor. I want to be an operator. I want to do all of that. And that's the direction I went into. And so like I said, I joined or enrolled in a real estate educational program and started learning how to underwrite. And I totally misjudged how much time, energy, effort there was going to be, and how many degrees there are in the whole thing. We can go into any one of those things, but
so you're talking about transitioning from the LP to the GP. What kind of enamored you about the GP side versus the LP side?
I found that people, number one, it was the contrast for me from sales to the real estate world is I found that people were more willing and open to partnering and working together and like making money together. And it seemed like it was less competitive than the sales world I was used to. So there was this general openness of like working. It was like one was sucking energy from me and one was giving me energy because I was excited about the potential and just learning all this new stuff. And I think that's what's very attractive for me. And being in the GP role, there was just a lot more control and flexibility with being able to kind of chart your destiny, right?
And one thing I definitely like about the GP role is the control. I've raised money for other people, been in charge of my own deals, but I think for me, the control is the most important. Everybody has different philosophies on this. Some people want, as GPs want to raise money for other people and not operate. I love the control. It's a lot easier for me to be not 100%, but mostly in charge of what my investments are doing. But now you mentioned coaching, what were your thoughts about coaching? How did that help you? Would you recommend coaching? Would you do it again?
For me personally, my style of learning and what gets me comfortable is
Mhm.
actually working with the coach. I enrolled with the guys, Jake and Gino. I was part of one of the first student groups to kind of go through their academy there. They're wonderful people. I love
They
them.
are.
They really know how to, we'll call it, pick and enroll other really great people, like as far as the students and the community goes. So I can't say enough good things about those guys. And at the time, early in the program, there were some things that were missing that I eventually kind of picked up from like getting started and having a support network to help you go through the initial learning curve of things. And the learning curve never ends, by the way. It was very, very instrumental in helping me get started. So absolutely, why reinvent the wheel? Why take on the brain damage and work with someone that's been where you're trying to get to, I think
Yeah.
is universal. And I apply that to all aspects of my life and business now.
I'll say something similar. I got into the Michael Blanc coaching
Yeah.
program.
Oh, I used to, that was my first underwriting calculator, Michael
Oh
Blanc.
yeah, yeah, yeah. I mean, I did it about the time. So we were probably contemporaries in different programs because I think
Yeah, it
Jake
was
and
like
Gino started about the same time. But
18.
2018 is when I got into that program, and I think what you said was spot on. Michael Blanc's program wasn't 100% comprehensive either. You mentioned about Jake and Gino, but I got to say, at first I had some complaints about what wasn't there. But when I finally sat down and looked at what was there, I was like, there's enough here for me to
Yeah.
figure it out and,
Yeah.
fill in the gaps myself. And that's where I think the coaches really help, is to kind of fill in the gaps as well. But that was just my own experience.
I agree.
Yeah.
And what I've learned, and as I've kind of gotten older, is like this really is a great saying. When the student is ready, the teacher will appear.
Yes.
And some of these things you'll think you'll need or you won't really need until you actually are in that situation
Mhm.
where then you need to learn that and know that. So no problem.
I was thinking about that exact statement a couple of days ago. When the student is ready, the teacher appears. I think the reality is a lot of times the teacher's always there, but
Yeah,
as a
you don't.
student, you don't realize it until you're
Right.
ready, so it's and that's something I found all over the time. When I really, really want to learn something or really need something, it's like the universe delivers it. But
Yeah, or even going back to materials that you read, you go back and reread it again, and you have a different level of understanding, and something
yeah,
connects with you, and you're like, oh, that's what they're talking about. I remember for me, like cap rates didn't really make. I mean, they made sense on
Mhm.
paper, and NOI and how they interplay with each other, but it wasn't until you're in the role of like talking to a
Yeah.
lender what cap rate we're going to use and how that actually works out in the real world. So
Yep, exactly, exactly. So yeah, coaching after coaching, how did you progress and how did you kind of evolve as a real estate investor from there?
yeah, some things going to happen in parallel or in parallel really. It was getting involved as an LP in a passive deal. It was like a 42 unit in Houston, Texas.
Hmm.
A little bit of exposure to some GP responsibilities there, not a lot, but just a little bit. And then that's kind of around the time I realized I wanted to do more of my own deals. So,
Hmm.
enroll with guys at Jake and Gino. And then through the network of the community there, we were able to do our first deal. One of our coaches, their Bill, threw us a lead, if you will,
Hmm.
for a deal. It was an off-market deal, 12 units, still own it today in Georgia. And I pulled together a bunch of friends from the group, and we all kind of went together and bought a 12-unit property. Its rents were under market, small little light value add, and that was it. And then really things kind of picked up after that, doing a 92 unit in
Hmm.
Augusta, Georgia, with another
Okay.
friend of ours in the program. Then we got an off-market like D class property in just outside of Atlanta.
Ooh, D
That was
class. That sounds fun.
we bought it for $18,000 per door. We
Okay.
basically bought it for, what did we get? 900 grand,
Hmm.
right? 900 grand. And we sold it for like 2.1 million.
Yeah.
There was so many problems. So
Oh
many.
yeah. So question for you. Knowing what you know now, would you still do that deal again?
Yeah, I
Okay.
would. When we went into there kind of eyes wide open, knowing that like the experience gained from this and the gray hair earned from this
Yeah.
will allow us to, I don't know, have that like perspective for better properties because you've dealt with the worst. So we knew what we were getting into. It wasn't like a complete shock and surprise. And there is value in doing bad deals, and there's value in doing good deals. Arguably, there's better value in doing the bad
Uh-huh.
deals. You learn so much more.
True, true. Yeah. I mean, we had one, we paid a little bit more per door. We paid 23,000 a door for
Oh,
Columbia, South Carolina. So,
yeah.
next state over. And oh my gosh, that was the biggest headache ever. We bought it, it was just below 900,000. I want to say it was like 800 and 880, 870 or something like that. And we sold it for like 2.1, 2.2 as well. So made a lot of money. But man, I mean, compared to the other investments I've done, that's the one that I almost wish I didn't do. I mean, yeah, we learned a lot, but I kind of wonder, man, could I have learned those lessons without that big of a headache? But anyway,
Maybe it's an interesting academic, kind of thought exercise, but
yeah.
like, I also think this is where the spiritual side comes in. There
Mhm.
is element where, you made that decision for a reason. There
Yeah.
are things you needed to learn so that you can be in a position, perhaps in the future, to be
Yep.
able to take advantage of a better opportunity. And you wouldn't have been there in the right time, in the right place, in the right position unless you did that thing. So
Mhm.
I think it all works
Yeah.
out.
Yeah, yeah. There's always the what ifs, the things that you don't know, the bigger picture. But
Yeah.
I can't help but wonder. Out of everything I've been in, that's the one that I'm like, oh, should we really have done that one? But anyway, yeah. So a couple properties start picking up traction. Let's resume your story.
Yeah. So I would say kind of things really kind of took off
Hmm.
when I had a chance encounter. This is a longer story, but I'll make it very quick. Actually, in your neck of the woods in Sundance, Utah, I went to a 3-day mastermind, and
Hmm.
literally the first person I walked up to, I picked a table. Gentleman's name is Howard, and turns
Hmm.
out he was a very, very experienced apartment operator. He was the only guy in large multifamily out of 300 people. And so we got to spend a lot of time together during this event and got to learn more about himself and his business. And
Hmm.
he just lost his wife, whom he loved dearly. And so there was a potential partnership for us to work together and have him basically be the steward of the unique way in which he ran his property. So at his properties, he called people.
Hmm.
There wasn't a property manager. There was a mayor. There wasn't a leasing agent. They were membership coordinators. And his job or his philosophy was to elevate the status of a renter beyond a renter, more like a country club member. And this
Yeah.
isn't like luxury living. This is normal workforce housing. But he just wanted to elevate them so they felt
Yeah.
special living there. And that's making a very long story very short. And so
Hmm.
Howard was very influential in how we built our company, Significant Lifestyle Communities. And
Hmm.
we saw an opportunity to buy a large portfolio, a 278 unit complex
Nice.
in Ohio. It was right
Okay.
across the street from $100 million mixed use transit oriented development, TOD. That's a fun word to say. Uh,
Hmm.
and rents were under market by like $600. And we bought it right in the beginning of COVID. So we had to go through all of the ups and downs, not being able to raise money in time, falling
Hmm.
out of contract, going into contract, falling out of contract, and then getting it
Yep.
all done 8 months later. So that we still have that property. It's still performing, very, very well. And that was the one that kind of put us on the map because, being able to self-manage a 278 unit, 6 building portfolio will give you a lot of
Yeah.
gray hair or hair on your chest or
I
hair.
just got flashbacks. I mean, we had one property about ready to close when COVID shut everything down, and we had one property that was we had an LOI signed on a property, and so it was really, really interesting how everything panned out. I mean, things were delayed. It took us probably another 4 months. The property we had under contract and almost closed. I think we added an extra 4 months to how long it took to close. So I get it. I get it. I mean, COVID really interrupted a lot of things in this business.
It did,
Yeah.
but getting
So,
that property done was a big, big boost for us. And kind of the thing where things started falling apart, I guess you should say, not even falling apart, just like really started proving stress cracks.
mhm.
Was the thing I didn't do early on was focusing on marketing
Yeah.
and branding myself and our business and building out our investor network. And that would come to bear a problem for us as an operator and our ability to scale. Because if you
Yeah.
don't have, capital for, I can only put so much money in my deals. You have to maintain a certain amount of liquidity, right?
Yeah.
As a GP, for the bank's sake. You also need walking around money, as my former coach used to say, to be able to take deal down and get under contract. And that became a limiting factor for us. And so we tried many times to get more deals under contract for the next couple of years. And it was very difficult. A lot of at bats with various private equity groups and family offices to find a co-P partner or a funding source, and a lot of pies in the face, essentially. And then, of course, it got complicated. I'm backtracking here, but it got complicated when interest rates shot up, stayed up, and kind of getting through COVID stuff. And it just became very, very difficult to be an emerging sponsor. We'll call it 22 through 24.
So I run a couple of networking events and an educational community and everything else. And I mean, the networking events I had, the amount of people that would show up on a weekly basis, 60 people, 70 people is what we were getting on a weekly basis. And then comes the interest rate hike cycle. And just judging by the activity in the groups that I host, it seemed like everything just kind of dropped off of a cliff. At first, it was kind of slow. And then it was just like boom. And you're absolutely right. It was really hard to be an emerging sponsor, and my networking group and my educational group, really focus on those emerging sponsors. And I saw it, I saw it a lot that people just weren't interested, were more interested in, doing their regular job or whatever. But yeah, difficult times.
We kind of talked before we started the green room, if you will, whenever I really wanted an opportunity because I know a lot of the audience are focusing on being GPs, and I think it's great. I'd love to be able to share some things that I don't think a lot of other people talk about, right, in the real world of being an owner or operator. And one of them, there's a lot of things. I think for me, it was realizing that basically being a private equity business owner, depending on what you want to do, there's a lot of elements to that. And if you're by yourself, that's one thing. If you have a partner, that's helpful. But even between two people, there's so many things that a operator needs to understand, and they're deep. I mean, these are things that not in the real world, but like for much larger organizations, that's the sole responsibility for one person. For example, investor relations, right? Marketing, underwriting, asset management, property management. Like I just listed off 5 things right there. And those are all things that we were doing ourselves or we had to learn. And so for us, like the amount of seeming brain damage or just struggle that we had to go through to kind of really make sure the wheels were on the bus was really hard. And that's something that I wasn't exposed to at all. It was more surface level, kind of glossed over. And all of those things are really super important. They all rely on each other. And if you're going to try to grow and do more than one deal, you need to have a plan on how to learn that, figure that out, outsource it, delegate it, onboard, build a team. It's hard. And I give a lot of credit to other groups that I think came in and out during our time when we came up, where they figured that out and they were able to build a team and scale that, because it is freaking hard.
Yeah, I mean, it turns out, I think a lot of the mistakes I made early on were assuming it was going to be a lot easier, assuming you hear about the importance of the property manager, and it is important to have a good property manager. But I think probably the biggest mistake we made was we'd hand the property over to the property manager and then just, complain when things weren't going exactly right, and after firing, I think the 3rd property manager in like a 9-month period, I finally sat down and I'm like, maybe it's us, and it was. But yeah. And then looking from the other side, some of these things are hard to teach as well, but I don't know what the answer is inside the educational communities, but
I think the answer is awareness. It's recognizing it. You really can't gloss over and skimp over these other elements of things. And I think if people had more awareness or were able to come in with eyes wide open, as much as you can, right? Because you can't explain, forecast everything. But I think that's half the battle. And that's, I like the fact that we had an opportunity to kind of tap into that a little bit during our conversation, because if you're new and you're listening to this show and you're like, this sounds great, it is great. Don't get me wrong. And there are also a lot of hard things that you should be aware of. It's not all rainbows and butterflies. I mean, maybe there was probably in the 15, 16, 17 kind of coming up and then around, that's okay. Part of the cycle.
Yeah, and hopefully we'll get to that part of the cycle again. I mean, we're not there now for sure, but hopefully we'll get there again. One thing I try to do, with I got a small coaching program, but when we do twice weekly group calls, but I try to tell them exactly what's going on at our properties. It's
Yeah,
like,
that's a
hey,
great
here's one for you. Here's one for you. And I'm a lot more open with them than I might be with on LinkedIn. But yeah, we have struggles, we have problems, things pop up. Contractors run over budget and things are done wrong. Sometimes your gate comes down on someone's car and you have to. Yeah, I
shocking.
know, right? Yeah, so. One quick example, yeah, we literally had that happen last week. A gate came down on someone's car and they have $1,000 insurance deductible, and so, guess what? We were taking $1,000 and throwing it towards their insurance deductible, right? So yeah, that's stuff that you don't realize happens, but it does, it's not the same thing every time, but it does happen.
I think people need to realize that, especially in multifamily, we're dealing with people's lives.
Mhm.
People
Yeah.
like you and I, we all have things going on every day, every moment.
Yeah.
There's something, and the more units
Mhm.
you have, the more lives and dynamics that are going on.
Yeah.
People get sick, people
Mhm.
die, people
Yeah.
they have divorces, they have fights, they have births, they have joy, they have graduations, they have all those stuff that's happening
Yeah.
at your property. It's a lot of.
And they leave stoves on and cause fires. And yeah. So I remember one of my mentors early on said, if you own enough units, you're gonna have fires.
Yep.
You're gonna have fires, and fortunately, I'm still one-handed on, how many fires we've had at properties, but I might have to start breaking out two hands here soon. But yeah,
Well, the top
a lot of
two and
things
a half
going.
happen. Yeah, that's it.
So, but yeah, lots of things that go wrong, but that's part of why you're a GP. That's what the GP does is they fix the problems. And, when you're doing things like a 75-25 split, that's how you earn your 25% split there is making those decisions and getting
So
stuff done.
that's
So,
something that I think might fly over the head for many people. And it's basically in this business, to be a real estate investor, you are a problem solver.
mhm.
That is literally all you do every day. The gate arm fell on someone's car. How are we going to solve this problem? Go. That's it. That's what you're doing.
Mhm. Yeah. And yeah, you're right. It's sometimes it is every day, sometimes it's not, it depends on the properties. But I got off of a property management call this morning and I was talking with one of my partners and I'm like, we're at a good spot on this property, and hopefully I'm not, jinxing myself by saying it, but I literally said the words, I'm like, all we got to do is keep occupancy up. We're at 95%. If we can just maintain where we're at right now,
Yeah.
we're done with all the planned renovations. We're done. All we got to do is maintain. But of course, it's not going to be that easy. It's not just going to be, hey, property manager, keep it above 95%, because there are going to be more problems. So, but yeah. Well, cool. So let's kind of fast forward, bring us up to where you are today. We talked, a little bit on kind of some of the challenges you are, but yeah, where are you at today and what's your projects look like?
Yeah, so I mentioned earlier one of the things that I didn't do early on was the whole marketing thing. And
Yeah.
so I don't know, about a year, almost 2 years ago, I
Mhm.
hired a marketing coach, right? Told you I'm a big fan of
Yep.
coaching, and went headfirst into all of the world of branding and building an audience, and
Mhm.
realized, I needed to be more active on social media. So did a whole bunch
Mhm.
of things. I don't like to do things half-assed.
Yep.
So included launching 2 podcasts, authoring a book titled "So Rich You Can Quit." The book kind of it tells my story of tech sales to real estate investing, and today I help other tech salespeople save money on taxes
Yeah.
and in low risk passive income generating real estate assets that we kind of pre-screen and vet for them as fund managers. So my partner
Mhm.
Matt and I call him my business wife. We today allocate capital for best in class sponsors,
Mhm.
whether that's multifamily or other asset classes like self storage
Mhm.
or home parks. And that's been fun to do. I think being able to take our experience as operators that have acquired 700 units over the years and our own in-house property management give us a good perspective and lens on being able to find high quality for our investors and grow our investor base and also put our money to work. And then when the
Yeah.
time is right and we've got a good base to be able to raise capital from, start going after deals again. But for now,
Yeah.
this is sort of how we've adopted to and I hate to use the word new normal, but this post crazy interest rate world that we live in right now. And I know that things will die back down interest rate wise. I don't know how far they'll go. But for now, that seems to be working pretty well for us.
Yeah, I talk a lot to people who are newer to the game, and the first thing I recommend, learn how to raise money, learn how to raise money, learn how to raise money. The difference between me and somebody that has $1 billion in assets is they've learned how to raise more money than me, and that's it. They've learned how to raise more money. So I think that's a really, really great place to be, focus on raising money. And the way I explain it to people, it sounds like the direction you're going is like you get to a point where it's like, okay, I've been involved in enough deals doing this. Do I want to step back into this role, or do I want to step into this role again? Do I want to shift roles again? But it sounds like you got a very deliberate, raise money, raise money, raise money, and then shift into that role. I think that's a perfect way to go.
I appreciate that, only because we were not forced into that, but kind of forced into that. And I wasn't in a position to be able to just do more my own deals because I didn't have access to the capital. So the only way to solve that problem is let's just learn how to raise capital and do that. And oh, by the way, it's a good benefit because it's a way where we can keep the lights on and also just slowly over time build out that capital base where when we are ready to do our own deals, it makes sense. And advice I would give to kind of new people in the world here is it is so valuable, I'd say, to be able to learn how to market yourself, copyright, and be able to talk to investors. And the more that you can understand how the business works, the more credible that you will be seen, and the easier you will have being able to raise capital. So it's very difficult, but what I'm telling you to do is do both at once. Learn how real estate works. And also learn how to grow your investor base. It sucks that it's hard, but that's really the best way that you can do that.
Yeah. And it's especially hard now. And I mean, I wish it would have been harder when I started. 2020, 2021, raising money was really easy. We never had a problem raising money for our deals. I'd have people call me saying, "Hey, Brian, I've got a deal coming full cycle in 2 weeks. I'm going to have $100,000. Do you have a deal where I can put it into?" And it's like, "Yes, I do." And I mean, that was, I'm glossing over a lot, but that's kind of how the market was in 2021 and into early 22. And, now that it's hard, I've had to actually go back and think, how do I need to change things? Because my normal post on LinkedIn, create conversations in the DMs and, get people on Zoom calls wasn't raising as much money. And so, yeah, we doubled down. We hired a marketing company instead of a marketing coach. That's adding to our investor list, so they're doing a lot of the heavy lifting. We're paying an arm and a leg for it, but they're doing like the heavy lifting on the lead generation, and we're hopping on calls and closing now. But I think there is a lot to be said about adapting. And I really do wish it were hard when I started, or harder when I started, so I could have learned those lessons earlier. So you know what? Maybe I don't regret that 30 unit. Yeah, maybe I don't. It was hard. So, and it was our second deal. So there we go. No regrets.
Awesome.
All right. Well, we're winding down. You already answered the question, advice to somebody new, which is one of the last ones I give. So the other question is, what's next for you? And by the way, we haven't talked very specifically about your book yet, and you had a special offer that you said you were going to give us as well. So make sure you throw that out too.
Yeah, sure. So, man, I guess I'll start with the offer. So I'm giving away free copies of my book, just cover shipping and handling. You can check that out at jpalbano.com/gift. And then you just sign up and I'll mail a copy over to you. And then as far as what we're working on, really, it's just been building out what I call the Tech Sales Investor Club. And it's exclusive, kind of invitation only private club where we help other tech sellers kind of build their financial fortress, which is getting all of their assets and all their financial egg ducks in a row. And then we provide them with education and then access to pre-screened and pre-vetted real estate investment deals. Or they actually, I shouldn't say real estate because we're doing our first kind of a private equity project where it's buying businesses. But the point is, it's opportunities to put your money to work by pushing the easy button. And we're excited about that.
Awesome. And last question, how can listeners learn more about you?
Yeah, you can check me out on LinkedIn, or you can go to my website, jpalbano.com. Albano is similar to the old school 80s wrestler, Captain Lou Albano, ALB. No relation, unfortunately. That would have been a fun story to tell people. But jpalbano.com.
Awesome. Well, hey, thanks for coming on the show today. Very much appreciate it.
Absolutely. Thanks, Brian.